technical analysis with the flat top chart pattern, which usually has a large green candle near the beginning, making it similar in some ways to the bearish harami candlestick pattern. Sometimes this pattern has features resembling other patterns such as a compact double top. In any case, candles usually close and have their highs group together and remain relatively flat, like in these cases. Reliable resistance ranges can often be identified by running horizontal lines through the upper flat portion of the bearish reversal. Often this will be the highs, closes, and opens of candles, which are usually in close horizontal alignment. Like the flat bottom chart pattern, sometimes there can be larger candles during periods of higher volatility, but usually there will be a low net change where the chart doesn't move significantly up or down until the pattern completes or fails. This 122 to 124 range also shares some similarities to double and triple top patterns. These are normal, quick, sharp downswing points, often finishing a downward reversal over the course of 2 to 4 candles relatively quickly. In contrast, here's a flat top mostly defined by the close horizontal alignment of the upper wicks from these candles. Then this flat top is mostly horizontally aligned at the real bodies of the candles in this group. The large green candle could be considered near the beginning of the pattern, and to some degree, the level around its low and open price has some influence on the chart. But of course, the main range of interest is still the mid 620 to mid 630 range, where there's another flat top. Indeed, this range remains quite a strong resistance area, with several sharper downswings that follow. The next example begins with a failing double top range. Contact is maintained with the upper portion, which is soon surpassed. If there was instead a bearish reversal into April, this would be a likely flat top in addition to a triple top. Next, a similar situation repeats, except this time the upper portion of a failed double top soon sees the emergence of a downward reversal that is in fact from a flat top. The result is a spread out triple top reversal that doesn't get very far down. But nonetheless, the upper range from 169 to 170 continues to be a useful landmark as the chart drastically changes over time.